Hello, welcome back everybody. Let's have a look at some of these charts then, shall we? So it's been a bit of a crazy sort of 24 hours actually, where we had a nice drop and a huge buyback actually. So when we look at the chart, we can find out what that means, where we're going to go roughly, or what it basically means, because we're still dancing on the edge of a certain precipice at the moment, and it's all driven by Bitcoin. So we can look at some of these other charts, and we will look at some of these other coins, a mixture of them. But really the whole move's driven by Bitcoin, and this is the reason why. So just having a quick look at the chart overall, what we see when I look at it, actually when I look at this chart, what I do see is it's slightly bearish still. So I still think that there's more of a possibility for it to fall lower than go higher. However, this bounce we've had today is quite reassuring, and it's just playing out at the moment. So as you might remember, when we go through this chart, we go back in time, we've got this descending trend here, where we've been stuck beneath for over 2 years, just going down and down and down and down. Obviously that was 20 grand there, all the way back down to 3.5 grand there. So we found our big bounce up there last year and was rejected from it here, actually causing us to fall, I would say, down to this would have been the bottom if it wasn't for that entire market collapse, the financial situation collapse. But without that, this probably would have been the bottom, so around 6,600 thereabouts. So yeah, we touched it there and we came down plummeting beneath it. What do we see here? We see ourselves coming up to test it once more, and this was just last week. We tested it here, we hit it, and then we just dropped from it. So it's to be expected. It's a long-term descending trend that we're still stuck beneath. I would have expected that on the first pass, and to be honest with you, I think I probably specified that that would be a good place to sell out or short the market at that point. Anyway, what we also have is we have this upwards trending level of support starting from around 7,700, and we've been under that, or just dancing above it now for about 6 weeks. Every time we touch it, we're supported from it, we go back up. Every time we touch it, we're supported and go back up. And actually, it was only just last night where we actually broke down beneath it. But look where we came back up. And it's always candle bodies that count for me. Wicks there for liquidation, and there would have been a lot of people perhaps liquidated from that level. Certainly a lot of buybacks from that level. But look at where the candle body's closing at the moment, back within the wedge formation, this nice triangle wedge that we're getting closer and closer to making a decent move either to the up or to the down. And actually, the more you look at this, the stronger it becomes, despite some of these other moving averages. Well, the moving averages are good, but some of these other indicators suggested perhaps maybe a bit more to the downside. Now, further to the downside at this point would mean probably a more significant drop, maybe coming down to test around 9,000 and staying there before an inevitable drop down to the 200 exponential, which currently is around, well, it's moving up, which is good, but it's roughly around mid 8,000s. You know, I would say the exponential at the moment technically is at 8,450, but I think we'll probably get a buyback before there, but we would certainly find support there. And on top of that, we're above this nice green cloud, which is all very nice. However, unfortunately, what I have noticed is that if we look a little bit closer, and this has only just happened as of today, and it's only a daily chart. You know, if we look to the weekly, we see a different story. But if you go to the daily chart, we actually do have an Ichimoku cloud cross here just taking place as of yesterday. Despite this massive buyback that we've got, we do have that cross. Now, the cross is only just crossed, but it's a cross all the same. And the cross was incoming, if we can see that. And generally what that means is that from this point forward, we would expect a downtrend, a sustained downtrend. But, you know, there's a lot of other factors to play, and you can't just use one tool to trade on. But generally, that's what that would mean. Even though it is only on a daily time frame, we look at the weekly, it's quite the opposite effect. So long-term trend looks very, very strong. It looks like it wants to go to the up. Short-term does suggest that there's more downside to be had. Unfortunately, if there is more downside to be had at this current price level that we're at right now, roughly where we are right now, around about 9,400, further downtrend from here would mean we would come down incrementally to test at least 9,000 or 8,600 or so. Anyway, that's Bitcoin, and that's where we stand with Bitcoin. RSI, it could be, it could be starting a bit more of a move to the up. It's in a nice area, whichever way it wants to go. It's got plenty of room, let's say that. I mean, it could make multiple, it could make at least $1,500 move to the up. Equally could do the same to the down before it gets in territory where you'd feel, you know, safe in buying or shorting. Well, reasonably safe. Obviously, I'm not a financial advisor. This is not financial advice. So we're in kind of neutral territory. The formation is a bit choppy, so that also makes me think that maybe it is a little bit bearish. It doesn't look very constructive. The money flow index to me is getting a little low, which usually means, you know, when we hit some of these levels down here, this is usually a good buyback. So there's conflicting indicators here, which makes it, for me, kind of the same as I was, you know, for the last few weeks, which is to trade within this wedge formation. Even though the profits are getting less and less as the days go on, trading within the wedge is the place that you want to be trading in, and have your stop losses set around this level, you know, and certainly be very interested in having having a take profit around these levels. However, this, you know, like I say, I mean, long term looks quite good. So the fact is, if we do break out of here, we will go very high. It will be multiple thousands. It won't just be 1,000. It might be 2, 3, 4. It could go really high. But for the moment, we'll trade within this wedge and we'll play it safe. A break above here and a sustained break is likely to have continuation. So if, for me, you know, I'm always going to be wanting to take profits, but the closer we get to this wedge, you know, my stop losses will increase in their value, locking in profit, and the likelihood of me wanting to sell at the top of here is getting less and less and less, because the chances of it having a breakout is getting higher and higher for me. But again, you know, we're a couple of weeks away before this is over, and it could still break either way. But given the fact that we had a nice buyback there, it looks, you know, even though we did break down beneath it, we've closed above it, we're still within the triangle. Let's have a look at BNB. We don't really look at this. I'm on the 15-minute chart at the moment, because obviously on a day like today I've been making some trades, you know, so I trade, usually the 15-minute chart is the one I prefer to do. So but BNB not looking quite as strong as Bitcoin, but, you know, it's not got its golden crosses or anything along those lines. Let's just have a look at Bitcoin's MACD there. They're more or less the same. Money flow index is actually more of a centerpiece, but again, this doesn't have technically any real formation to it. Where are we going to measure this one from the wicks or for the sticks? So there's nothing really going on of any significance on this chart. It's very difficult to trade it. It's more of a fundamental basis that a lot of people hold BNB. So I'm not going to say to anybody that this looks like a good chart, because it doesn't. It's definitely right in the middle. There's nothing about it that says it's a good buy, but there's nothing about it either that says that it's a bad buy. What I would say is that because we don't have golden crosses on the daily chart, it's not looking as bullish as Bitcoin. Clearly, we have a bit of bearish divergence on the 12-hourly. However, it does look like it might be ready for a bounce. So I think it's going to do what Bitcoin does, but I don't think it's going to have the same strength. Ethereum, now this used to be my favourite for the beginning of the year until the crash. I did really like this, and actually looking at this one now, this looks more constructive than any. So we go to the daily chart, what we see is that you see an actual bounce take place on the green 50 exponential, so that's good, because usually, obviously we broke down beneath the centre of the Bollinger Band here, so bouncing on that green 50 exponential, that's relatively reassuring. It's also the bottom of the Bollinger Band too. Further breakdown from here, yeah, that would be quite nasty. It would be coming down below $200. So we're talking about roughly, and it's increasing ever so slightly, but it's not got a great deal of momentum to it. Yeah, it would be below $200, about $195 thereabouts, if we were to break down beneath it, and that would certainly get, I would imagine that would get bought back up relatively quick. Matic, now let's have a look at Matic. Now Matic's got a different component to it at the moment, so get off this 15-minute chart. I've taken on a fair bit of Matic again on a fundamental basis, which isn't something I normally do, but obviously the price has come into that as well, so I've got myself quite a fair amount of Matic at the moment, just because I know that they're going to be implementing the staking rewards on this soon, and because it's obviously not accepted on Coinbase at the moment, but it is with Binance. We look at coins like Harmony One, for instance, more or less doing roughly the same thing, and they were ahead, so they've already got their staking sorted. You can stake that on Binance. So Matic is leverage tradable, so which is, in my opinion, actually hurt the asset. I mean, when you look at the charts compared to Harmony One, I'm not going to get Harmony One out right now. The Harmony One does not look like this. Harmony One looks like an absolute shitcoin, but that's because it was an IEO and being brought out on an IEO or an ICO. Has basically created a pump and dump, whereas Matic actually doesn't do that. Matic has got its own weird looking kind of chart going on here, but it does not look like Harmony One. If Harmony One wasn't an IEO, then and its price was basically, you know, like a dead heartbeat, and then its price was based upon its fundamental values, then you would say, if you were to just take a snapshot of what Harmony One looked like from, well, I mean, they all look good from since the crash, but since the staking rewards, it's held quite a lot of value, and it's a sustained value. I think what we'll see with Matic is something along those lines. Unfortunately, because it's leverage tradable, I think we'll see pumps and dumps. I'll be very interested to see how those pumps and dumps look when it's available for staking rewards, because essentially that's you've incentivized hodling. The whole hodling process has been incentivized at that point, so people will be more likely to be buying it and holding it just for staking purposes. Obviously, it's a margin tradable asset and it's highly volatile anyway, so there will be pumps and dumps, obviously. But where are the dumps going to come down to? Are they going to come down to these levels where we like to bounce from? We're talking about 1 cent, 1.2 cent, or are we going to be coming down? Where the pump's going to be pumping and then coming down and leveling out around the level that we are at right now, around 2 cent. Or will we just see astronomical growth? I very much doubt that with Matic. I think what we will see is a sustained but rocky road up to its previous and all-time highs eventually, but it'll be a very bumpy road, and definitely relies on the health of Bitcoin to an extent. The chart itself, let's have a look. So the chart itself, we're looking here at negative but still in positive territory MACD. We're looking at a really decent bounce area just here from the money flow index, so that looks quite good. RSI is basically straight in the middle, and volume actually not being very high at all right now. So when volume is creeping to its low areas, it generally means that it's getting ready for a spike. So let's just hope that spikes to the up, because obviously I've got myself a bag of that. Since the drop last night, this has been my biggest buyback. And let's look at XRP just for fun. I do hold a fair bit of XRP, but it's because I like to leverage trade it, because I find that its supports are often very strong, not that its gains are anything to be preaching about. So let's have a look on the daily chart. What do we see? We see a horrendous bearish chart, but one thing that it's got in its favour is that, unlike Bitcoin, we've had a long-term downtrend for over 2 years, and we've been stuck beneath it. We broke out above it just before the crash, and that was great, and I saw this take place, and we bought it here. I think a lot of people on my Telegram group bought it here, and sold it here, because when we saw it test this twice and it wasn't going to break, so we sold around 34 cent. Didn't get back into it at all until this happened, and then I got back in again, and obviously leverage trading, but it also means that I hold a big bag because my profits are all in XRP anyway. So I'm waiting for the right time to strike. I'm not so sure as I want to be going long or short on this right now, but what I would say is that it's still a bearish chart. However, we are above the descending trend line, which obviously at this level is descending at such dramatic speed that it's not going to be long before it reaches a zero. So obviously we're going to have to hold above it at some point. So we are holding above it right now. We did come down to test it as support, and we sort of held around there. Now we're kind of flatlining with a bit of a bearish, you could call it a bull flag, but I don't think that's a bull flag. That's not much of a pump, enough for it to be a bull flag, even though, what were you talking about there? What was that move? It was still a 21% move, so it wasn't too bad, but looking at it now, it doesn't look like a bull flag. But I'm not really into those sort of and those sort of trading tools anyway. I mean, bull flag, it could be, but you know, if you're holding on to profits here, it won't feel very bullish, will it? The MACD still pretty bearish. There's a little bit of bullish divergence to it. The money flow index is what's interesting me with this right now, coming right down below 20, which at this level usually would suggest that it's not likely to go a great deal further before we find a pump on this. So in that respect, only on this indicator only, no others, just this, it looks like something good could happen on this one. So like I say, I'm not going to go long or short on it right now. I'm holding a bag, so if it goes, it goes. If it doesn't, it doesn't. I'm not willing to risk any capital on it at the moment, because that's just one indicator. All the other indicators don't look very good. The formation doesn't look very good. You know, we don't have any sort of decent crosses on these moving averages. In fact, they're all looking pretty tired out and droopy. Getting above this green 50 exponential, which is going to be roughly around 20 cents again, might be a bit interesting for me. Maybe I'll start to go long and look to take profits around the 21 exponential. No, not the 21, the 200 exponential. But then again, it still carries risk. So obviously all of it carries risk. And one thing, like we saw on Bitcoin, we do have a negative cross on the Ichimoku cloud here, plus we're beneath the cloud, so this would suggest a continuation of the move down. So like I say, we do have one thing in our favour, money flow index, but it's not exactly in the right place, but it's in a pretty decent place for an opportunity to buy it. But are the profits gonna, you know, without leverage at least, are the profits gonna be anything to talk about? Perhaps not, you know, perhaps not. It's only when we get above this green 50 exponential well, I'll start to get a little bit excited, above this itchy cloud as well. And obviously getting above the 200 exponential is the holy grail, but we're talking 22 cent around that level, so that's a long way off from where we are right now. But either way, you know, there's a compelling argument for the bullish side, at least very short term, for XRP, but overall the chart, generally the rest of the chart does tell you otherwise. So a bit of a gamble, but like I say, that is trading. Anyway, I'll leave it with you there. Thanks for watching. I hope you have a nice evening. Take it easy. Have a good one.